Just as important as placing a take profit is placing a stop loss and knowing where to place it. If you can learn how to use stop losses and take losses once in a while, you'll be able to manage your risk better and become a successful, profitable trader. Let's talk about a couple of methods about where to put your stop loss using the Fibonacci levels we've learned about. The first method is to set your stop loss just past the next Fibonacci level. So for example, if you had shorted or sold here at the 50% fib level, you could place your stop loss here where that arrow is pointing above the 61.8% level. So you just place it above the next Fibonacci level. Pretty simple, right? The reason this is a good method is because if price breaks past the Fibonacci level in the opposite direction of the trend, then the whole setup may have been invalid and the trade is probably not any good. At that point, staying in the trade would be based on hope that the market would turn in your direction, and that's just luck, and we don't want to trade based on luck. That's why a problem with this method of setting stop losses is that it's entirely dependent on you having a perfect entry. Setting a stop loss just past the next Fibonacci level assumes that you are really confident that the support or resistance area is going to hold. And as we pointed out earlier, using these drawing tools isn't an exact science. We're just warning you that this might happen, sometimes a few times in a row, so make sure you limit your losses quickly and let your winners run with the trend. It might be best if you use this type of stop placement method for more short-term trades. The second method on where you can place your stop loss, and that would be a little bit safer so that you don't get stopped out early, would be to place it past the recent swing high or swing low. So for example, here you can see that when it's in a downtrend and you're in a sell position, if you place the stop loss here above the swing high, then the swing high can act as a potential resistance level, and so that could be a good place to place your stop loss. Same thing if the market is trending up and you had placed a buy trade, you could place it below the swing low, since that swing low is probably acting now as a support level. This type of stop loss placement is going to give you more breathing room, and it's going to give you a better chance for the market to move in favor of your trade. This method is good because if the market moves all the way back to the swing high or swing low, it has probably already made a reversal. Setting a larger stop loss like this would probably be best for more long-term trades. Of course, with a larger stop loss, you have to remember to adjust your position size or your lot size accordingly, right? So you don't want to over leverage your account. You don't want to have one trade with a really high lot size and then put your stop loss really far away, or that's just a recipe for a disaster. So just be careful, and as we always say, practice, practice, practice on a demo. So which way is better? Well, just like we use the Fibonacci retracement tool with support and resistance, trend lines, and candlesticks to find a better entry, it'd also be a good idea to use these other confirmations to find a good point to put your stop loss. If you can tilt the odds in your favor by combining multiple tools, it can help give you a better exit point, give you more room for your trade to breathe, and possibly a better reward to risk ratio as well for your trades. So that's it for this section, and we'll see you in the next one.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.